All right. Good day. I'm Martin Gago with Market Radius Research. It's Thursday, March the 9th, and we've got CEO Morgan Good and VP Exploration Jeremy Hanson of Carlyle Commodities joining us today. Carlyle's flagship project is the Newton Gold Silver Project in southern BC. It's very accessible and close to infrastructure. They've got a gold inferred resource of 861,000 ounces gold inferred resource with a lot of exploration upside. But please remember, this is not investment advice. We're here to learn about the company. Gentlemen, thank you very much for joining us today. And please walk us through the presentation deck and give us an overview on Carlyle.
Thank you, Martin. Really appreciate you having us here today. It's a pleasure to be on. My name is Morgan Good. I'm CEO of Carlyle Commodities Corp. Our ticker is CCC on the CSE in Canada and DLRYF on the OTCQB in the United States. And as Martin alluded to, we have a very strict focus here at Carlyle. We own 100% of the Newton Gold Silver Project, which is located in South Central British Columbia. The project boasts a very strong resource of nearly 1 million ounces of gold and nearly 5 million ounces of silver. That is a inferred 43-101 resource calculation that we actually updated last year in 2022. So it is a current 43-101. The company recently actually just finished, if you see the newswire, our first ever drill program on the project itself of just over 2,000 meters. But historically, the project has had approximately 35,000 meters of drilling and nearly $25 million spent on the property. Most of that work was done between the years of 2009 and 2012 by the previous owner and operator, Amark Resources Corp. The company does have a 5-year notice of work permit on the project. So with the permit and the brand new inferred resource, we've set ourselves up very nicely for what we believe to be a macro environment building very strongly in the precious metal sector. A little bit about the management team. As I said, I'm the CEO and director, Morgan Good. I've got nearly 20 years of experience in capital markets, ranging from investor relations and marketing to structuring of shell companies, looking for entrepreneurs and assets that can combine to build teams such as we have here at Carlyle, where we find undervalued projects like the Newton at down times in the market. So we actually acquired the project in 2020 with the anticipation of a strong bullish market in gold and silver. So it took us about the last year and a half or so to get all of our ducks in a row, get the permitting, get the new 43-101 in place, and which brings us to today. Jeremy, who will be speaking in a few minutes, is our VP of Exploration and also a director. Jeremy's based up in Smithers, British Columbia, which, as many of you may know, is the mining exploration hub of Western Canada. And Jeremy runs his own geological consulting firm called Hardline Exploration, based out of Smithers, where they focus on exploration work for junior public companies alike across the province. So he's got an infrastructure of human capital and people right up in the center part of our province, which is a huge advantage for working in BC. A couple of other names there, Leighton Bocking, also a seasoned junior mining venture capitalist with about 20 years of experience as well, financing and developing various companies in the United States and Canada. So collectively, even though we're all around the age of 40, have nearly 50 years of experience in junior mining. Here's some of the examples of some of the companies we've been a part of, some of which were from inception all the way to production. In the case of Timmins Gold Corp, now actually called Argonaut Gold, they're in Mexico, as well as Garibaldi Resources. That was a company that had a major discovery in 2017 in the Golden Triangle, and Jeremy was responsible for actually sourcing that project and putting it into Garibaldi. They had a lot of success a few years ago. So we know the lay of the land when it comes to finding assets that are undervalued, financing them, and driving value over the course of a junior mining lifetime. There's our cap structure. This is one thing we're quite proud of. There's only 25 million shares issued and outstanding today, which is really a big advantage when it comes to obviously seeing upside and price appreciation. When you've got such a well-structured cap table, it obviously bodes well for any new investors coming into the story. And obviously trading around 20 cents Canadian gives us a market cap of just $5 million, which is, in our opinion, when you own 1 million ounces of gold and 5 million ounces of silver outright, it's clearly a value proposition that we like to point out. It's a little bit about our location. As you can see here, this is a zoomed in map of the province of British Columbia. And down at the bottom, you'll see the city of Vancouver, which is only about a 7-hour drive north along a highway up to a city called Williams Lake, a town, I should say, of approximately 10,000 people. And just about an hour and a half to the west of Williams Lake, you drive right along another highway and then logging roads directly to the property, to the Newton Gold property. So it's got incredible infrastructure. You can work the property year round. That's 12 months of the year. In fact, we just finished 2 months of drilling through January and February. So we're not, we're not dealing with a lot of the challenges and logistical costs and all those things you have to face up in the Golden Triangle, which is, of course, many of the companies in British Columbia that people think about. That's where they're based. So the fact that you can actually drive there from Vancouver, or you can even fly to Williams Lake and get to the project in the same day is a huge advantage. And Jeremy, being based in Smithers, which is about a 5 or 6 hour drive to the north, allows him and his team to get easy access to the property at any time. If he needs to drop something and get down there that same day, we have the ability to do so. Here's an even more zoomed in picture. And one of the things I haven't mentioned yet is, Carlyle's project, the Newton project, has an extremely amazing analog to a company called Artemis Gold and their Blackwater project, which is actually just going into production as we speak. They actually halted their stock and announced some news this morning about receiving the final BC Mines Act permit, which is a full green light ahead for Blackwater to go into production. They've got about 12 million ounces of gold. We've got just under 1 million ounces. But the project, it's not a closology play. We like to call it an analog play because it's up the same geological trend and the same geological belt. So they've got the same type of host rock, the same type of mineralization, the same type of alteration, very similar grades. We're essentially a miniature version or an analog to that play. And we believe that we've only scratched the surface thus far with all of the historical work that's been done at Newton and some of the opportunities that we have drilled in the last 2 months, as well as what we plan to drill throughout the rest of the spring and summer to open up and unlock some of the potential of the Newton project itself and see if we can make it a multi-million ounce story, the same as the Blackwater. Again, here are some of the comparables, as I just mentioned. One of the most important things to remember here is the host rock, this felsic volcanic unit, which is similarly across all of the open pit bulk tonnage deposits in this sort of belt in British Columbia, the Prosperity, the Bruce Jack, of course, notably Artemis's Blackwater right now. These are all very, very similar deposits, and the Newton is in that category as well. It's just in a much earlier stage, albeit quite advanced from an exploration standpoint. As you can see, it's the same age, the same type of deposit type, alteration, mineralization. And if you look at the metrics on the drilling, you'll see that we've had approximately 10% of total meterage and 10% of holes drilled, which in essence adds up to the fact that we have just under 10% of the resource in gold and silver. A little bit more about the history. The project was actually sourced by a gentleman named Mr. Newton a little over 100 years ago. Some nominal work was done in the 70s, 80s, and 90s and early 2000s by 3 or 4 different operators. And as I mentioned at the beginning of the presentation, it wasn't until 2009 that one of the Hunter Dickinson Group companies, Amark Resources, and Robert Dickinson, who many of you may know, who's in the Mining Hall of Fame, he actually originally made this discovery scale project become something, and that was in 2009 to 2012. So for about 4 straight years during a pretty reasonably strong gold market, they drilled over 30 or nearly 30,000 meters of drilling themselves, spent approximately $25 million, and that's where the deposit itself became something. And it was therein lied the opportunity for Carlyle in 2020 to actually acquire the project and begin the process of bringing it to this point where we believe we can take this through a bullish gold market and expand the resource into be something hopefully that looks a lot like Blackwater.
Morgan,
I'll pass it over to Jeremy, unless Martin.
Morgan,
question.
Sorry, just a quick question. So a lot of work's been done. You've almost 1 million ounces there, which is impressive. Why did production kind of or development exploration stop back in 2012 and kind of under what terms were you able to pick it up in 8 years later?
Great. Yeah, well, 2012 gold basically fell off a cliff. So there was no technical impairments at the time. It was simply the fact that they were incapable of financing any further. So through 2012 to 2020, it sat dormant. And AMark actually owns 3 other major copper porphyry deposits within the pubco. So at the time, I knew Bob Dickinson from a personal level and had my eye on Newton. So when Jeremy and I connected a couple of years ago and we started to talk to Bob, the opportunity came to the forefront where AMark needed some liquidity for that company. They had other focuses, and we purchased the project outright for $1.8 million in stock and cash, paid for free and clear. Maybe I'll hand it over to Jeremy now if he's going to dive into some more technical merits on the project and its history, as well as its potential of why we think this could be a major, major deposit.
Yeah, thanks for all that, Martin and Morgan. So I'm VP Exploration for Carlyle, as well as a director, and have been working in primarily Western Canada for about the last 14 years. And got involved in this project when there was an opportunity to join the team in 2020. So that's when Carlyle acquired the project. I'll just briefly go over this resource estimate from July 2012. So this at the time was considered a compliant resource, but they changed the definition in Canada to what a resource incorporates, and now they need a theoretical constraint on them. So in this historic resource estimate from 2012, at the same cutoff grade in our current one at 0.25, there's 1.6 million ounces and just under 8 million ounces of silver. But then so the reason this is considered a historic resource is in 2014, they changed the definition. So you have to have some sort of constraint, whether that's a theoretical open pit or a theoretical block cave model. So the first thing we did when we acquired this project is create a new resource so that we can market it appropriately and deal with all the cautionary language appropriately and rules for disclosure. So we recalculated the resource in 2022. Between the 2012 resource and the 2022 resource, there's no additional drilling or work. It's just a new set of rules to go by. So in our new compliant resource, at a cutoff of 0.25 gold, we've got 861,000 ounces of gold and just under 5 million ounces of silver at a grade of 0.63, which is remarkably or similar to the Blackwater deposit. And this resource sits primarily in the southern portion of the geochemical and geophysical anomalies. So on this map, this is showing gold and soil, and I'll flip into a more detailed picture here. So our resource sits at the bottom in probably the southern 30 or 40% of this gold and soil anomaly. And this anomaly itself is 2 kilometers by 1.5. But the resource is in this 800 meter by 800 meter section down here. Similarly,
Jeremy, sorry, just going back to this slide, the lighter yellow stuff surrounding the black border, that's all your property, and the darker yellow, orange, and red, that is okay. That's where.
Yes, correct. So this is the property outline here.
Yeah.
So there's lots of room to grow it. One thing I can point out here is these are year-round roads that you can drive. Highway would be right up at the top of this, 40 kilometers away.
Yeah.
Similarly, on that highway, there's power. There's infrastructure. But on the geochemical signature that the system displays, it shows a gold anomaly 2 kilometers by 1.5 kilometers, yet the resource is only down here. Similarly, so this is that same gold in soil anomaly outlined, but now it's overlaid on top of an induced polarization chargeability anomaly.
Okay.
So where we see these densely packed drill holes, this is where the current resource exists. That's because the drill holes there are dense enough, the spacing is close enough that we can calculate an inferred resource. The majority of these holes that are scattered throughout the geochemical anomaly and the geophysical anomaly do contain significant grades. They're just a bit too widely spaced to be included in a resource at this time. So that'll be part of our ongoing exploration, is to expand this drilling footprint so that we can expand the resource, the pit shell, as well as get into new untested zones.
How far is the spacing with the estimate in the inferred resource area?
These are about 50-meter space holes.
Gotcha. Okay.
And so I'll get into some examples of that. So this is just a summary of that the IP anomaly is 4 kilometers by 2 kilometers. The soil anomaly is 2 kilometers by 1.5 kilometers. And the resource itself is open to depth as well as to in multiple directions. These are some of the historic grades and intercepts. So you can see some of the high key ones to point out are, right from surface, 200 meters of 0.6. This one right here, also right from surface, 6 meters, 189 meters of 1.5 grams. And then some very, very nice long ones, 400 meters of 0.5 and 0.6. So nice big intercepts, consistent mineralization throughout the deposit, which is shown here. So the type of mineralization here is disseminated sulfides. So we're not, dealing with little discrete veins that we got to chase and figure out, and then, they get stretched over across larger intervals than what's actually there. It's nice, consistent mineralization throughout. And so this is some slides showing how we're going to continue to grow this deposit. This black outline there, that's the theoretical pit outline. That is the constraint on the current resource.
All right.
And as you can see, there's these two main zones here, and then another one here. These are associated with this yellow package of rocks, which is the felsic volcanic unit. And this package of rocks it's porous enough that when the hydrothermal fluids came through this package of rocks, they were able to percolate through there, deposit sulfides, and then those sulfides deposit the gold as well. And so you can see this yellow unit here is wide open. The model just cuts off because there's simply no drill data here. Similarly here and similarly here. So we've identified, right at surface, this zone, which has only been tested by 1 drill hole, and is a felsic volcanic unit that should extend this way with more drilling data, should extend this felsic unit as well as this felsic unit. So that's what we did on our very first hole. We just completed an initial drilling campaign throughout January and February, just 2,000 meters. And our very first hole, we drilled a 1,000-meter hole for 2 reasons. One, we wanted to prove that this system can be big, it can grow, it can expand rapidly. So we drilled a 1,000-meter hole starting at surface up here, testing our hypothesis that this felsic volcanic unit should continue and extend. So the first 400 meters, we do our due diligence. It's our very first hole. We got to verify some historic drilling. So the first 400 meters goes through the known mineralization, but as soon as we were past 400 meters, we're into untested ground. And so we stayed in this felsic volcanic unit to 1,001 meters. We thought, okay, that seems like a pretty good place to stop. And so we don't have the assays out. We haven't received them back yet, but it stayed in the right felsic volcanic unit the entire way. We see the right alteration, the silica and sericite alteration, as well as disseminated sulfides. So we're quite optimistic that we're going to just, prove that this thing is bigger than what the current resource shows. So we drilled 1 hole through there, as well as then a second one where we're trying to, really understand, is this main felsic volcanic unit, is it going to dip or trend more south or more westward? So
Jeremy, sorry to interrupt, but just very quickly, I think important to note that the historic drilling never, the deepest hole was around 500 meters, right? But the majority of the drilling that put that constrained resource together was 300 to 400 meters in depth.
Yeah.
So drilling the 1,000-meter hole well below depth is nearly going twice as deep as it's ever been drilled before, which is, to your point, our hypothesis of showing right off the bat how big and how deep this could be. Right.
And you didn't punch through the wanted mineralization at the end, so it's open to below. So it makes sense, obviously, to drill deeper than the historic holes.
Yes, exactly. A lot of the historic holes that could have kept going. Our big, point of our big hole right off the bat is just to really prove that this, can be a big system, and that if we can find a 1,000-meter section here, there's no reason why we couldn't find more 1,000-meter sections. And it is important to note that on this property, it's covered by a lot of glacial material, so there's not a ton of outcrop.
Yeah.
So a lot of the exploration is using the geochemical models, the geophysical models, and then the geology. So we got to kind of figure out where these felsic units are trending.
Yeah.
Test them. So that's some of the exploration that we completed. So we're going to continue to grow this resource by expanding this zone here. This felsic unit should expand, as well as this felsic unit right at surface should expand. And that's going to allow us to rapidly increase this theoretical pit.
Gotcha.
And then immediately surrounding that pit, there's quite a bit of low-hanging fruit. This is just one example where we've got this interval here in hole 76, 171 meters of 0.69 gold, but it just doesn't have the drill density around it to be included in a resource.
Yeah.
So by simply adding more drill data and more drill density in areas like this, we can expand that resource, which is shown by the unconstrained historical estimate. That was almost double what we currently have in the constrained resource.
That pit, that theoretical pit where it's constrained by, how deep does that go at the lowest point there about?
That goes to about 400 meters.
Okay, gotcha.
So that as we widen that, even just by widening it, it picks up, it'll pick up more ounces of gold.
Yeah.
And of course, all these things grow exponentially, right? Because they're 3D models.
Yeah.
So we just completed our phase 1 drilling, which is going to, prove that this thing can be big roots, big potential. We're going to gear up for a secondary round of drilling where we're going to test some of the immediate higher grade zones that are outside of the theoretical pit shell that I just demonstrated, as well as some of the geophysical, where we have got geochemical anomalies in soil, the right geophysical response, and the model showing that there should be the felsic units there. Test some of those that are a bit more distal, as well as increase the drill density around the deposit. We're not going to do quote unquote infill drilling. Infill would be, when we want to bump the resource from an inferred to an indicated.
Yeah.
So we're not going to do that. We're going to just focus on continuing to expand the inferred resource, build the tons, build the ounces, double, triple, quadruple what we have.
And it's not just sort of blind step out drilling. You're really still punching in holes to try to understand the structure and figure out where it's most likely to be open and sort of proof some of your theories and do it that way, right?
Yeah, certainly following the geological model that we have, where these felsic units should, they can continue for hundreds and even kilometer scale long sections of mineralized felsic volcanics. The mineralization does also exist in the other rocks, particularly the quartz feldspar porphyry, which is kind of the extrusive equivalent to the felsic volcanics. But by following the felsic volcanics, where they're showing the right chargeability and the right magnetic intensity, that's how we're going to continue to track down this mineralization. So there's a lot of stuff to do immediately around the resource to keep growing that, as well. Any of those geochemical anomalies that are 1,000 meters away or 800 meters away could represent a whole new system to get into. Yeah. So there's lots of exploration potential throughout the project. As demonstrated, we can work it year round, which in BC is quite an anomaly, a bonus. We were just wrapped up a drill program. There was 6 inches of snow. So just drive there on a pickup truck any day of the week. We're not, looking at just a small exploration window like in the Golden Triangle, where you're really limited to July to September.
Yeah.
And it's close to infrastructure, 40 kilometers from the highway, power, lots of water around. The topography is about as good as you can get for if you wanted to build a mine, kind of these flat rolling hills, no huge geographic impediments.
Yeah. Right.
Very well positioned to explore this and expand it and be able to work it year round and have news coming out year round. So I'll throw it back to Morgan here just to summarize the last little.
Well, Thanks, Jeremy. Great overview. That picture that people are seeing right now was taken about a month ago, 3-4 weeks ago from site. And you can see the guys are driving their pickup trucks right to the drill, just to sort of, demonstrate exactly how well infrastructured it is and how easy access it is. And I think it really gets overlooked how important those little details are for guys to be, especially living in Smithers. I mean, literally everybody that works on this site is either from Smithers or Vancouver or somewhere in the close area of BC. So to have the whole team so close to Jeremy, at a finger's touch or a phone call away, you're right there. You're not flying helicopters over mountaintops and dealing with some of those extreme challenges that really are problematic in the junior mining game. So,
when you say problematic, that equals money. So it just makes every meter a lot more expensive.
Less problems are good. So we can eliminate the challenges. It obviously makes it a more interesting investment opportunity, clearly.
Yeah.
Well, yeah, that's about it. I guess, Martin, we'll hand it back to you for the Q&A.
All right. Thank you very much. And yeah, everyone, please type in the questions. If anything is you're trying to understand something. What you've just finished, you announced on March the 1st that you announced the first phase of your drilling. Just when do you expect to, what areas did you punch into there, and when do we expect to get results back? I don't know. I wouldn't think the assay labs are too busy right now, just at the end of the winter time, but give us an outline on what to expect or what type of data to expect coming out of the phase 1.
Well, you're right. Absolutely right. And Jeremy will confirm this. The labs are obviously a little quieter this time of year in BC due to the whole Golden Triangle obviously not being that active. And with Jeremy's relationships, we got samples in, basically every 2 weeks, the samples that are finished get shipped in. So we wrapped up the final phase of drilling approximately 2 weeks ago. But I believe we're expecting our first hole, the first 1,000-meter hole, potentially next week. So things have moved rather quickly. It's on sort of a 3 or 4 week timeline from when you submit the samples, when typically that could be more than double. So that's also something that's boding quite well for Carlyle right now.
All right. One other thing that's very important with drilling programs in Canada, and I don't know, especially BC, but throughout Canada, are First Nations relations, the cooperation with the local communities. Can you give us an overview on where you stand with the local communities?
Of course. Yeah, no, we've been in communications with the local communities for a few years now. And as recent as the last 30 days, we've met with the chiefs and various councillors and are looking to build a strong relationship moving forward that will enhance and benefit all of the communities up in the Williams Lake area, as well as the Carlyle community. So things are going well there.
All right. I'm curious, like we've had the NDP government in for several years now, and I've generally been impressed that they're pro mining, they're pro good jobs. Not everyone works in Vancouver in the tech sector or the finance sector. How are you feeling the working with the government? Is it a good flow, responsive and helpful?
The permit took a little longer than we were hoping for, but I don't think COVID assisted in that process. Being short-staffed and what normally would take about 6 months took a little over a year. Aside from that, it's been quite pleasant dealing with the ministry, who have been very helpful in recent months, especially if we've gotten active and we've been drilling up there, because obviously we're in more communication with them when we're doing work. But I think, it doesn't hurt. As of this morning, as I said, the BC Mines permit was awarded to Artemis, which is just up the highway. And you could argue that it's the largest open pit deposit going into production in North America right now. And it's literally a couple hour drive up the highway. So I think we're in a pretty friendly spot when it comes to making sure that we can develop the Newton over the coming years without any political interference or challenges.
Yeah. With the, you got it initially constrained by the open pit. if there is mineralization, hopefully further down and resource below, like obviously it's way too early to say, but I guess initially the model would be have open pit at the top and then go underground after you do the open pit work. Would that sort of off the cuff here, would that be a plausible model to talk about this early stage?
Jared?
Yeah, that's certainly certainly a possibility. That's, you know, at the Red Chris mine up in northwestern BC, that's what their long lifetime plan is for the mine life, is to do the open pit as deep as possible. And they're going to get that pit probably 800 meters deep and then start going underground as a block cave. Okay. And they've got, you know, that similar grade of about under a gram gold, but they've got some copper in there as well. So yeah, certainly a feasible and realistic, you know, potential way to mine this.
Yeah. And have you done any work on the metallurgy of this, and what kind of processing would be required? Would you be expecting good high grades or high extraction rates?
We haven't done any metallurgy, nor as any of the previous operators.
Okay.
It's something we might consider, you know, throughout this year, but our material is so similar to, not that we're saying it's the exact same, the metallurgy would be the same as Blackwater, but the host rock's the same, the alteration's the same, the mineralogy is the same. So you wouldn't be unreasonable to say it should be quite similar to the Blackwater metallurgy, where they do get fairly well good recoveries.
Yeah. All right. So you've got phase one done in the can, so to speak. You got to wait for the results to come out. Then you process the data, and then you're going to come out with your phase two plan on the back of the phase one results. Is that the basic plan?
Yes, exactly. Right, Jer? I mean, I think we're excited to see what these first couple of holes tell us, but the plan will be to position the company for a more robust phase two. That's going to, I guess, you know, it's hard to say exactly where we want to drill yet because we want to see what these results tell us first. But I think the plan would probably be to drill somewhere around 5,000 meters, you know, sometime later in the spring. So not too far away now, being mid-March, probably in about 8 weeks or something like that.
Okay, you get the data back, you process it, you get your plan together, and then you get the rig spinning in like mid-May or
Exactly.
Something like that.
You got it. Yeah.
Gotcha. And how does your balance sheet look like right now? Are you going to have to raise a little more money to do that program, or how well are you cashed up at this point?
Yeah, we raised about $2 million late in Q4, which was, you know, we anticipated sort of, you know, basically seeding the company, as I like to say, but the valuation that we were financing the company at was so attractive, and the cap table was so clean that we actually attracted a little more money than we had anticipated. So, you know, the plan's always been to raise more money. The question is when and at what valuation will we take more money? So let's see what these first couple of drill holes tell us. It could present a much different story for Carlyle's stock and metrics as to which we're going to finance the company next. But yes, we will need to raise more money to go out and do a bigger, more robust program in the spring.
All right. Okay. I think we've kind of hit the key points here. We're no more questions from the audience here. Is there anything else you guys want to highlight before we wrap things up?
Maybe I'll just finish up by thanking everyone for taking the time to be here today, and thank you, Martin. I think that you know, having the drill core being the biggest game changer in junior companies like Carlyle, you know, it's pretty exciting that we've got these results coming over the course of the month of March and into early April, because it could set us up for a really exciting year and beyond. And you know, having such a nice cap table also presents an early opportunity for people that don't already own our stock. So I just think that having those catalysts today differentiate us from other $5-6 million market cap companies.
All right, makes sense. Gentlemen, thank you very much. That was great to see work being done in British Columbia and keeping the local people working and creating wealth there. So thank you very much. Looking forward to getting updates as the project moves forward. Thank you.
Thank you, Mark. Thank you, everybody.